Today is 6th of April 2024. Right. What we have done in the previous case, we have done 3 workings. Okay, 3 workings. The first working with cost of sales. The second working is with respect. This is second working. I don't know how it there. This is the second working with respect to depreciation, and we have done another working with respect to value in use. Okay, the impairment. Okay. Now that's what we said. Is right. Now they are asking us what is the requirement. The requirement is you have to prepare statement of profit and loss account. Is that you have to prepare statement of profit and loss account, and you have to prepare the statement of financial position. Okay. Now whenever we are doing this, we have to make it sure. Okay. Revenue is how much? Revenue is 390. Okay. Revenue is 390. Put one small cross here. Is that put one small cross here? Is that cost of sales is how much? Cost of sales is working 1. How much we have done cost of sales? How much we have calculated cost of sales? How much we have calculated cost of sales?
$253.
920. Okay, 920. Is that 920? What is the difference you will get? What is the difference you will get?
$136.
136.
80.
136.
80.
This is called as
Gross profit.
gross profit. Okay, this is called as gross profit. Next, what you have to take?
Operation expense.
Okay, operational expenses. Okay, what is the operational expenses? Operating
Administration
expenses. Okay, operating expenses. What is the first? What is the? You have distribution.
Administration expense.
Distribution cost. How much is the distribution cost?
6,800.
6,800. Okay, you put it directly. You put in brackets. Okay, put one cross. Administration expenses. How much is there? Administration expenses. How much is there?
12,700.
12,700. Put one cross here. Okay, administration expenses. How much you will get here?
116.
116.
580.
116, 580. 116, 500. This is called as
Operation expense.
profit from operations, or operating profit, or operating profit. Okay, profit from operations or operating profit. Next, what you have to do?
Financial cost.
financial cost, is it? Finance cost. How much is the finance cost? They have paid how much? 3,600. Okay. Next. 3,600. Next. Anything finance cost? Anything finance cost? Check. Check. Anything finance cost? They have said how much? 12%. Okay. See the things. 12% loan issued. How much is the loan amount? How much is the loan amount? 40,000. Okay. How much is the loan amount? This is very, very important. Students will ignore this. Students will ignore this. Okay. You have to be very 12% loan interest. Okay. 12% loan interest. I am putting here as working for. Is it? I am putting here as a working force. Finance cost. Okay. Finance cost. How much is the finance cost? 12% loan. Is it right? What? How much is there? 40,000. It comes to how much? 40,000 times 12%. It gives to how much? 4,800. Is right? It gives how much? 4,800. How much they have paid finance cost? Finance cost in trial balance. Is right? Finance cost in the trial balance. How much they paid finance cost? They paid finance cost 3,600. Is right? They paid finance cost how much? 3,600. Is right? They pay finance cost is how much? 3,600. Fine. Now, still how much they have to pay finance cost? Is that still how much they have to pay finance cost? Finance cost is still finance cost is how much? Finance cost is 1,200. This finance cost is the outstanding. Again, I will explain you. Loan amount is how much? 12%, 40,000. This much loan you have taken. How much you have to pay? How much you have to pay on that loan? You have to pay 12%. Is it right? You have to pay how much? 12%. If you calculate 12% on 40,000, is it right? If you calculate 12% on 40,000, 4,800. Already they have given trial balance. Means this is the amount they have paid. Is that this is the amount they have paid? 3,600. Outstanding is how much? 1,200. This outstanding should be shown in two places. Is it right? In two places. The one we have to show in the income statement. The second we have to show in the current liabilities. Most of the students will in examination will only see that is 3,600. Directly will take 3,600. No. We have to see the statement of financial position, and according to that we have to work it out. How much is there? 1,200. What you have to do? Finance cost is 3,600. Is it right? Finance, I will write again. Finance cost is 3,600. This is given in trial balance. Is it right? This is given in trial balance. Next, add. Okay. Now outstanding. Okay. Outstanding. This I have writing it as a working for. How much is it? 1,200. Total finance cost is how much? 4,800. Okay, total finance cost is 4,000. Is it clear? Salim Ismail, Salim, Mazin, Hussein and Sumayya.
Yes, sir.
Okay, little bit. We see, little bit careful means next question whenever you are doing anywhere, we will do trial balance anywhere. Okay, because it is part of chapter 1. It is chapter 1, it is 20 marks. Understand, but it is chapter 1 and 20 marks. You can do anywhere, okay, with every adjustment. Find how much you will get here. How much you will get here? 116,580 minus 4,800. It comes to how much? Very fast. 116. You have to do 116,580.
111, 780.
111 780. 111 780. Okay, now this is called as profit before tax. See, we have learned this in chapter 1, but we will continue this learning this in every chapter, and it is 20 marks question. Okay, it is 20 marks question. Now is that we have done loan interest, anything is there. This is current assets. Okay, this is, we have taken this in cost of sales. This is also current assets. This is current liabilities. Is that this is equity. Is that this is equity. This is also part of equity. This is a non-current liability. The taxation is there. How much is the taxation? Taxation is how much?
1,300.
1,800. Okay, taxation is how much? Taxation is how much? 1,800. Now there is something is given for taxation. Is it right? What they have mentioned in taxation? See the thing. Point number 5. The directors have estimated the provision for taxation for the year ended is how much? 6,500. They have estimated provision. Is it right? This will also come in two places. One, it comes in income statement. One will come in the current liabilities. Okay, whatever information is given, it comes in two places. Fine. Taxation. How much is the taxation? Taxation trial balance. Is it right? This is the taxation in trial balance. And this is the taxation add. Taxation. Is it right? 0.5. Okay, 0.5. How much? 6,500. Okay, how much? 6,500. Total how much you will get? 6,300. 300. Is it one? It is 1,300. 1,300. How much is the taxation? Taxation is how much? 1,300. 1,300. How much you will get?
103.
7,000.
7,800.
800.
Okay. What is the difference?
103, 980.
103, 980. Okay. This is called as profit for the year. This is called as profit for the year. Are you okay with this? Is it right? Now, major part what we have done. Okay, major part what we have done. We have done something differently. Okay, we have done in terms of depreciation. Is it right? Working 2. Working 1 we have done cost of sales. Okay, now this is similar to exam question, 20 marks. Okay, similar to that, little bit plus or minus will be there. Okay, little bit plus or minus, but it is almost similar to exam question. Okay, we have done cost of sales, depreciation, we have done impairment. Okay, we have done impairment. Is it right? Now impairment very clear. Okay, impairment. What we have done impairment? In the impairment we have done carrying amount, we have done net realizable value, and we have done value in use. Okay, we have done value in use. Three important things we have done. These are three important things we have done: impairment, carrying amount, so net realizable value, value. After Eid holidays, revise this. After Eid holidays, I will put little bit more work to you. I will give so many practice questions to you. Understand my point? Very simple. After Eid holidays, it is the examination mode. Till now we are in the silent mode. Understand point? After Eid exam mode, I will give questions. I will work out the things, and I will extend one day, additional day. Whatever you decide, inshallah, according to that we will work. Little bit give me more time. We will do practice as much as possible. Now we have done carrying amount, net realizable value, value in use, and impairment. Okay, revise this again. Now we have the profit for the year. Okay, what we have done, we have all done the things. Is it right? We have done this. Now they are asking you to do they are asking us to do the balance sheet also. Is it? They are asking us to do the balance sheet also. How we have to do? Very quickly. Okay, very quickly. Fine. Now, is it right? I'll put here. I will put here. Everybody is writing now?
Yes, doctor.
Okay. Now, this
Yes,
is
sir.
what? Please write. I trust you means I trust you. Okay. I trust means as you are trusting me, I will trust you. Okay. Statement of financial position. Don't listen, please. Okay. Financial position. What is the statement of financial position when it is as on, okay, 30th June 2007. Okay, 30th June 2007. Put like this. Here nothing is there. Here it's all the things we have done in working. Workings are very important. Okay, particulars, amount, and amount. Okay, particulars, amount. Now first what you have to do, if I am fast, tell me be slow. Okay, I am very slow. Okay, non-current assets. Okay, non-current assets. So 20 marks question, I am telling you very clearly. Now, in non-current assets, what we have to do, we have to see, this is what we have done. Is it right? This is the depreciation and straight land property. Land is there. Is it right? Land is there. Buildings is there. And plant and equipment is there. How much is there total? Now first write property, plant and equipment, land. Write separately, nothing will happen. Okay, write separately so that clarity will be there. Is it land? How much is the land? Take working to. Okay, take it as a working to from where we are getting. Okay, land. How much is there? How much is the land, my dear?
30,000.
30,000. Okay, write separately, nothing will happen. Buildings are there. Is it? Buildings are there. How much is the buildings?
Seven 76,800.
76,800. Is it right? 76, 800. Property and plant and equipment is how much? Plant and equipment is how much?
102.80.
No, last value. Last value.
89.
There was impairment, is it right? Last value, how much?
89.80.
89,080. Total, how much
Yeah,
you
yeah.
get?
89.80.
How much total you will get? 30 plus 76 800 plus 89,080.
195,880.
195,880. Next, what we have to write?
Current asset.
Current assets. In the current assets, which one we have to take first?
Cash and equipment.
Inventory. Closing inventory. Okay, closing inventory. How much is the closing inventory? Closing inventory, how much? Here they have taken see the things. Is that this is the closing inventory, okay? This is the closing inventory. Given here 30th June 2007. It is given 30th June 2007. See the one which I have highlighted. 18,100. It is there. Where are you people?
What you mean, doctor? We didn't get you.
See what you have to write in current assets. Is it right? Current assets. Inventory. Is it right? Inventory in current assets. When we are preparing the financial statements, we are preparing the financial statements on 30th June 2007. Is it right? Is it there? We are preparing on 30th June 2007. In 30th June 2007, how much is the inventory is there? In the where we will get inventory, we will get inventory in the additional information. Okay, where we will get inventory in additional information. In additional information, we have any amount of inventory check 1, 2, 3, 4, 5. One, two, three, four, five. Any additional amount of inventory is there?
No, doctor.
No. In the trial balance they gave an inventory. What is the date they have mentioned in inventory? They mentioned the
End
date.
of
What is
June.
the date?
30 June 2007.
30th June 2007. Is it right? They have mentioned the date as 30th June 2007. Fine. 30th June 2000, 30th June 2000. When we are preparing on 30th June. Means this is a closing inventory. Simple things we have to be very clear. Simple, because already they have calculated cost of sales. Is it right? Already they calculated. Is it right? I am writing for you or Anwar. Calculated cost of sales means closing inventory. Is there closing inventory is part of that? Okay,
Already taken.
closing inventory is already they have calculated cost of sales. This is the closing inventory. How much is there? 18,100. Is that how much is there? 18,100. Is it clear to everyone?
Yes, doctor.
Next. Okay, next. Closing inventory. Put one cross mark there. Okay, put next. What you have to do? What is the current assets?
Bank account.
Trade
Cash.
receivables. Is it right? Trade receivables. You are doing ACCA paper. You should understand the sequence. You should not write up and down. Okay? You are doing F7 paper. You should have know the sequence. Is it right? Receivables. First inventory. The second one is how much? Receivables. How much is the receivables? 31,600. Is it right? Check again. 31,600. Once it is over, put cross mark there. Okay. Next. After that, what we are doing?
Bank.
Bank. Put one cross mark there. Examination also very important. See, I'm telling very clearly. Totals are less important. Sequence and writing is more important. How much is the bank? Bank is 1,950. Is that bank is how much? 1,950. Okay. Any other thing is there? Current assets? No. Trade payables, the shares, taxation, retained earnings. Nothing is there. Okay. Do the total. How much you will get? 18,100. Very fast. Before I do, you have to tell.
33,650.
How much?
33,650.
How much? 33, my dear. 18,000s, na? 18,000s. 18,000, 31,000, 1,950, 18,100, 31,600 plus 1,950.
49,000.
Allah Kareem. Again check.
51,650.
No, dear. No, you should not do calculation mistakes. Okay? You should not do. Take my word very positively. Okay? Take my word. I am just suggesting you. How much is there? This plus this, how much we'll get? Plus 190, 195, 880.
247,530.
247,530. This is the total assets. This is the total assets. Okay. Next. Equity and liabilities. Is that equity and liabilities? First equity. Is it right? First equity. How much is the equity? Equity is how much? Ordinary shares. How much? 50,000. Put one cross mark here. Okay. Ordinary shares. 50,000. Is it right? Ordinary shares. Put two lines. When you are putting two lines, means that is the end. Okay. That is our put two lines. That is the end. Ordinary shares are how much? 50,000. Okay, ordinary shares are how much? 50,000.
Share premium.
Next, share premium. How much is there? Share premium. How much is
9,000.
there? Share premium 9,000. Put one cross here. Is it? Put one cross here. How much is there? 9,000. Next, retained earnings. How much is there? 11,450. Is it right? 11,450. Everything write separately. Retained earnings. How much? 11,450. Next, profit for the year. How much? Profit for the year, how much? How much we have calculated?
103,980.
Good. 103,980. Total, how much we'll get? Only this total. Okay? Only this total.
$174, 430.
174, 430. You write total equity, total equity. Is it right? Total equity. Okay? Next. Next, what we have to write, Salim?
Non-current liability.
Good. Non-current liability. How much is the non-current liability?
Trade payables.
Aye. 12% loan.
Oh yeah, loan.
Trade payables is a current liability.
Yes. Sorry.
Where are you? Is it right? 12% loan notes. 12% loan notes. How much is there? 40,000. Is it right?
Yes.
Next, Ismail. Sorry. Hussein.
Sumaya.
Yeah, Sumaya. Yes. Sumaya. Next, what?
Current liability.
Current liabilities. Good. What are the in current liabilities?
Trade
payable.
payable.
Trade payables. How much is the trade payables?
25,400.
Good. Next. 25,400. Next, what is there?
Income tax.
Income tax. How much is the income tax?
1,300.
No, 0.5. 0.5.
Yes. 117,880.
No, 0.5. The directors estimated the provisions for income tax for the year 30th June 2007. How much?
Yes, 6,500.
Next. Anything else? Anything else? Anyone? Anyone can answer.
Total equity and liability.
No. Current liabilities.
Anything left?
Think. Anyone? Working for. What is in working for?
Outstanding.
Outstanding finance cost. It is there. I have written there. I have written here current liabilities.
Yes.
Okay.
1,200.
1,200.
Oh yeah.
Is it right? Outstanding finance cost. Is it right? Outstanding finance cost. Working for. Okay. Working for. How much? 1,200. Okay. Anything else? See the things. Go to the trial balance. Okay. We have taken trade payables. We have taken loan. Is it right? Check again. 1, 2, 3, 4, 5, 6, 7, 8. All the things we have taken. Okay, we have completed the things. We have completed notes also. Now do the total.
33,100.
Huh?
33,100.
33,100. Total of this plus this, how much you'll get?
$247,530.
247, 500.
500.
Is it clear?
It become different, I think.
How, my dear, check again?
No, it's clear.
Don't change the page, Doctor. 1 second.
No problem, I'm here, dear.
Can you go up a little?
See, the best part I'm telling you about you all 4 people is that your commitment gives me energy to teach. Very simple, I'm telling you. The best part is you have not given any excuses till now. Is that your commitment is, this is what I expect from my students. If my students are committed, I will really stand for you people. Is it okay with this? Take your time, okay? Take your time, and after Eid holidays, start doing on laptop. Okay, start doing on laptop. How you can do, it's little bit initially it is tough. You can, if you can do simultaneously on the Excel, it's good. Is it? If you do simultaneously on Excel, it is good. But if you find it difficult, then do it on paper. But immediately, I want your fingers, you should get an idea about doing things on the Excel. Okay? Slowly I will train you, no problem. I will tell you, I will support you how best you can do it on Excel also. Is it done?
Yeah, can you just come down a little bit? Last part.
This is the last part.
Yes, last part. Yeah. Yeah. Done.
Done? Good.
Yes.
Now, we are doing my MCQs, okay? MCQs, every chapter is the revision. Understand, but every MCQ is the revision. Now, one by one, with whom we will start first? Who is there on the first? Who joined first? Hussein. Okay. Hussein, Sumayya, Mazin and Salim. No, we will go like this. Who has joined last, we will go with this, okay? Salim, Mazin, Sumayya and Hussein. Okay, Salim. Yes, Salim. Salim, Mazin, Sumayya and yes. Fine. The following information related to three assets. Okay. Now, what they say? They say that carrying amount, value in use, fair value less cost to sell. What is the total amount? Is it right? Here the carrying amount is more. Okay. Here the carrying amount is more. Fine. Here the carrying amount is less. Is it? Here the carrying amount is more.
More, yes.
Is it right? Here it is more. Okay. Carrying amount. Whichever is higher, we have to take. 90 is higher. Is it right? 90 is higher. Okay. 90 is higher. Impairment is how much here? 10.
100 minus 90 is 10, yes.
10. Okay. Now, here how much? Here the carrying amount is less. Okay. The carrying amount is less. Is it right? The carrying amount is less. Here what have a fair value less value in use and whichever higher is it carrying amount is less. This is
Fair
impairment
value
is nil. Is it right? Impairment is nil. Okay, no impairment. Is it right?
Yeah.
Next, asset C is how much? Carrying amount is
5.
40, which is higher 35.
5.
Impairment is how much?
5.
Total impairment is how much?
15.
50. You do this 4 marks straight away is in your minimum 4 marks. This chapter, minimum 4 marks it is in your pocket. Next, second one, what they are saying? Same thing. Is it right? What is the total impairment? Yes, margin.
Yes, doctor.
Carrying amount is 120. Which one is higher? 90. Okay.
120.
A is how much? Impairment loss. Is it right? Impairment loss. A is how much? 120 minus 90. It comes to 30. B.
30.
B. Carrying amount is less. Is it right? Carrying amount is less. No, impairment
Yes.
loss is 0.
Yeah.
Is it right? Impairment loss is 0. C. This is also impairment loss is 0.
0.
Okay. Here 70. 70.
40.
30. Is it right? D. Is it right? 70 minus 30. 70 minus 30. How much is there? 40.
40.
Total how much is there?
70.
70. Is it okay about this?
Yes.
Next, in accordance with IS 36, impairment of assets, which of the following statements are true? Is it right? Which of the? An impairment review must be carried out annually on all intangible assets. Is it right? On all intangible assets. It's not all intangible on all assets. Is it right? Is that an impairment reviews an impairment with intangible assets? See the impairment will be done for definite life or indefinite life? Impairment will done with what? Indefinite life. Only indefinite life impairment. Is it right? Definite life amortization. Okay, we cannot say that must be carried out on all intangible. We cannot say on all. We can have to say only on indefinite life of assets. Is it right? Only on indefinite life of assets. This is not true. This is false. Is it right? It will be done only on indefinite life assets. Okay, not all assets. Okay, not all assets. It is false. Fine. Next, if the fair value less cost to sell of an asset exceeds carrying amount, there is no need to calculate value in use. If the fair value less cost to sell, is that fair value less cost, net realizable value, is it right? Net realizable value, is it? Net realizable value is exceed the carrying amount, is it right? They exceed the carrying amount. If net realizable value is 70 and it is going to be exceed the carrying amount, is it? 70 is greater, this is the carrying amount. Is it? It is the carrying amount. Definitely there is no, we are not going to use the value in use, because net realized, once we are selling the asset, we are, if fair value less cost means you are selling. When you are selling the asset, we will calculate the net realizable value. Is it right? Selling the asset. If when we are selling the asset, again we will not calculate value in use. When we will calculate value in use, we calculate value in use when we are not selling the asset. Is it right? We will calculate value in use when we are not selling the assets. Is it right? This is true. Okay, any doubt? Any doubt you ask me. Okay, impairment is charged to statement of profit unless it reverts a gain that has been recognized in equity, in which case it offset against the revaluation surplus. Now you see the things, we have covered this in detail. If there is a impairment loss, is it right? If there is a impairment loss, what is the option one? The option one is we will check, is it right, if there is any revaluation surplus. From that revaluation surplus we will deduct. Okay. Now if there is no revaluation surplus, is it right? Option 2. Is that option 2? No revaluation surplus. Is that no revaluation surplus? Then what you are doing? We are doing it, we are deducting it from the profit and loss account. Very, very important point. Understand point? Very, very important point. Keep it in mind. That's it. See, first, whenever there is a impairment loss, whenever there is a, first you have to check whether you have reserves and surplus, revaluation surplus. Okay. First you have to check revaluation surplus. If there is revaluation surplus, deduct from revaluation surplus. If you don't have revaluation surplus, then only we have to show it in the profit and loss account. Okay, this is also true. Very important point. Okay, answer is what? Answer is answer is 2 and 3. Now, yes, Sumaya, tell me, which two of the following could be indication that the asset may be impaired according to IES 36? Decrease in market. Which two of the following? A decrease in the market interest rates. It is whether decrease in market interest rate or increase in market interest rates.
Decrease.
If it is interest rate decreasing or interest rate increasing?
Increase.
If interest rates increases, increase in interest rates, is that if increase, it is not decrease, it is to be increased. If interest rates are increasing, then only there is a impairment. Okay, then is if R value increases, present value will decrease. If R value will decrease, present value will increase. If interest rates is decreasing, no, it happens only when there is an increase in interest rates. This is false. increase in market values. Market value is increasing. It is an impairment. Market value increases. It is an impairment.
No.
No. Decrease in market value is impairment. Okay. Decrease in market value is a damage caused to the asset. Value of the asset will decrease.
Yes.
Is it true? It is there in the criteria, beginning of the chapter. Rules are there. Okay. Management intention to reorganize the business. You want to reorganize the business. 1 minute. I will go to the beginning of the chapter. There are internal factors and external factors. Is it? There are internal impairment, indicators of impairment. Is it? See the thing. Market value of the asset has been declined. Changes in technology. Interest rates increased. It is not decreased. Is it right? Increased rate decreased. Then it is a impairment. Okay. Internal sources, evidence of obsolescence, damage of assets. Okay. Damage of assets. Change in the way the assets is used. Okay. Economic development or anticipated worse than expected. Is it right? These are the internal sources. These are the internal sources and these are the external sources. Fine. These are the internal sources and these are the external sources. Go to the question. Is it? Damage of caused by the asset is the internal sources. Is it right? It is internal. And this is management to reorganize. It is a intern. Answer is what? Answer is C and D. Anything is there, you refer the things. Okay, what are the internal sources and what are the next? Come back to this. Hussein, I am here to help you. Okay, very big question. Okay, it is almost the things which you are doing. Finsbury has a cash generated unit, suffers a large drop in income due to a reduced demand for its products. An impairment review was carried out and recoverable amount is how much? Only 100. Recoverable amount. Okay, recoverable amount is how much? 100. Find the assets of CGU faring carrying amounts. 140. First what you have to do? We have to target goodwill. Okay, and current assets will remain same except inventory. Okay, current assets will remain same. Okay, the inventory and receivables considered be included at their recoverable amounts. Is that means consider inventory and receivables same amount. Okay, and this will be the same amount. This will decrease and this will be on a pro rata basis. This one you have to distribute. Impairment loss you have to distribute. Fine. Now first what we have to do? We have to put the table. Okay, we have to do the table. Particulars. Is it particulars? Is it the amount? How much is the carrying amount? Particulars. The carrying amount. Not carrying amount. The amount given. Okay, amount given and impairment. Please write. I will ask anyone to send me this picture for me. Okay, carrying amount. I didn't ask. Okay, fine. First, how much is the goodwill? Okay, goodwill. Goodwill will be 25. Okay, goodwill will be 25. Okay, next intangibles. 60. Okay, property, plant and equipment. 30. Is it right? Property, plant and equipment. Inventory. 15. Trade receivables. 10. Fine. How much is there? How much is there? 140. Okay. Now how much is the recoverable amount? Recoverable amount is how much? 100. Okay, recoverable amount, carrying amount will be how much? 100. Difference is how much? Difference is how much? Impairment is how much? 40. Is it right? I will write this. Impairment is how much? Amount given is how? The assets carrying amount. Is it right? Carrying amount of cash generated unit is how much? 140 minus recoverable amount minus recoverable amount. Recoverable amount is 100. What is the impairment? 40. Is it right? Impairment is how much? 40. First you have to reduce what? First you have to reduce the goodwill. Okay, first you have to reduce the goodwill. Goodwill is how much? Goodwill straight away. Goodwill. Okay, 15. Is that goodwill is how much? 25. It is 0. Okay, 25 it is 0. Okay, now what they are saying, there is no impairment. This is 15, this is 15. Sorry, this is 15 and this is 10. Okay, here there is no impairment. How much is that? Impairment is how much? Distributed, to be distributed. Is it right? You have to pro rata basis. Pro rata basis. Okay, first, from whom you have to take? Intangibles. How much is the total of intangibles and this one? Intangibles and this one is 90. Okay? How we have to do? What is the fraction? Ismail, Hassan, Hussein? What is the fraction we have to take?
We have to take for inventory.
Intangible how much?
Intangible 60.
Good.
Divided by 90.
Good.
Multiplied by 15.
Exactly. How much you will get?
Then
Fine. Next. Salim. Property, plant and equipment, what is the fraction?
30.
Good.
Divided by 90.
Good.
Multiplied by 15.
How much you will get?
Five.
Good. This much you have to reduce. Is it right? This much you have to reduce. Okay. Here we have to reduce 10. Here we have to reduce 5. Okay. How much you will get here? 50. And here you will get 25. Now what they are saying, they are asking us what is the carrying amount of what? Intangibles. Is it right? What is the carrying amount of intangibles here? Carrying amount of intangible is how much?
50.
50. Carrying amount of intangible how much? 50. Is it okay?
Yes, doctor.
Yes. Done? Is it clear? What we have done, see the thing, you go multiple choice. We have done to impairment loss, we have done the conditions of 36 impairment, and we have done something on cash generated units. Okay? Is it clear to you all?
Yes, doctor.
Yes, Hussein, Salim, Sumaya, and Mazid.
It's the first year.
Okay? Fine? Now, we have done 4. Now, little bit, okay? Now you got the understanding. This is very important. Initially, we took a lot of time to understand how the thing. Now you understand. Very simple. They will give you a concept, they will give you an example. They will give you a concept, they will give you an example. The last question, is it right? This is what is there. The last test your understanding. Is that before multiple choice? Every chapter will have like this. The last test your understanding before multiple choice question covers completely. I am telling you with all my responsibility. When you are revising it, don't do for the first time. Once you have revised, the last question, I am writing this, the last test your understanding before MCQ. Is it right? It gives you a complete knowledge. Every chapter, I am writing this for you to make sure that what I am saying, I will put it on paper, black and white. Is it? You should understand, you equally do it, and by the time we reach last question, you will have complete understanding. By the time we do MCQ, you will not have any doubts. Okay? Is it clear?
Yeah, doctor, please.
Okay. Can we start next lecture? I will give only introduction, then we will see, okay? Tomorrow. Is it okay?
Yeah, doctor.
Okay? We have a lot of time. Still time is there, okay? We have good time, alhamdulillah, okay? 3:40 is there. Is that still 20 minutes are there? Minimum 20 minutes. Now, what happens? This is the non-current assets held for sale. Criteria, rules are there. That's all. Same, nothing is there. This any subject, only rules we have to little bit focus on the rules. Okay, non-current assets held for sale and discontinued operations. Whenever you have some non-current assets, okay, what will happen? You will say that these assets are for sale, but you have to know what is the rule. Okay, you have to know what is the rule of this. So in some cases, what will happen? You have a business. You have business, 5 different types of businesses. You want to discontinue this. Okay, you want to discontinue business C. Okay, you have to discontinue business C. Then there is separate rules are there. Okay, separate rules are there. That's all. Very small chapter which covers the rules as such. Okay, if you are selling an asset held for sale, assume, take an example. People will put on the houses for sale. The moment you are putting something for sale, means you have to sell it immediately. Is it that you cannot say that I am putting it for sale and say that I will sell it for after 1 year. No. The intention, is it? The intention, the decision to sell, that's very important. Okay. Discuss the importance of identifying, reporting the results of discontinued operations. When you say we are discontinuing, is it right? When you say it is discontinuing, we have to, again we should not come back and say that we will continue. We are eliminating. What is the rules? Define an account non-current assets held for sale. Right? Held for sale. How we have to know. And circumstances where separate disclosure is nothing but separate information of material items. Material items means value items for income and expenditure is required. Okay, there are three small objectives. Okay, we are talking about discontinued operations, we are talking in terms of held for sale, and we are talking about the disclosure. Whatever we are doing, we have to disclose, we have to inform. Okay, now coming back to this, is it? Now what we are doing something on IFRS 5. Is it? IFRS 5, International Financial Reporting System. Okay, IFRS means International Financial Reporting Standards. Okay, what they say? They say what is the rules for sale, what is the rules for how you are going to measure it, and what is the things for discontinued operations. Is that 1, 2, and 3. What is the objective? Requirement means, see, when you are doing the things, you have to classify, you have to measure, and you have to make a presentation. This is what we are doing in financial reporting. Is it right? In the financial reporting, always classify means, classification means where you are going to show, you have to measure in terms of value, and you have to make a presentation. For non-current held for sale, in particular, requiring such assets should be presented separately. You should not show it with balance sheet. Okay, you should not show it with the statement of financial statement. In the financial statement also, you have to show it separately. Is right? In the financial statement, you have to show separately. Now you have updated rules. Is it right? What are the rules? What are the rules for discontinued operations? In particular, the results of should be presented. Again, discontinued operations should be presented separate in where it has to be in the statement of profit and loss. If it is for sale, you have to show it in the financial position. If it is for discontinued operation, you have to show it in the profit and loss account. Is it right? Now, classification, what is the rules? Okay, very simple, very easy. Is it right? The entities shall classify non-current assets held for sale if the carrying amount will be recovered principally. Means you have to recover your carrying amount. Through why? How it has to be recovered? Through sale. Is it right? You have to sell it. Is that you have to sell it. For this, what are the conditions? It should be available for immediate sale in the present condition. Means you have to sell as it is. Is that you have to sell as it is. Now, means you have to sell it as it is. Second is, now what they are saying, there should be a commitment. Is that you have, the management is planned to sell, committed to sell. Is it right? There should be, you have to be a very you have to locate the people who are going to buy. Means you have to give promotions, you have to give advertisements. Is it right? You have to give advertising, you have to promote. Is it right? You have to appoint agent. Is it right? You have to appoint agent. All the things you have to seriously you have to do. They have to be active market at a price. Is that reasonable? You should have a good price, okay? There should be a good price. No overprice, no underprice. Means you have to reasonably price it. Is it right? If I say that I'm selling my car for 10,000, nobody will buy. Okay, nobody will buy. The price should be reasonable. And most important thing, it has to be sold within 1 year. Revise these rules, everyone. Okay, on these rules we will have MCQs. Understand my point? Now you can understand what we have to do. Rules, one question will be there, MCQ. Okay, one question will be there on MCQ. Within 1 year from the date of sale, it is likely that there is a significant change to the plan will be made, and the plan will be, means once you have decided, no backup, no reverse decision. Is that the decision will not be reversed? Okay, once you have means, and it has to be less than 12 months. Read everyone, read once again, only this read, and once it is over, let me know. Everybody read this one. Everyone read classification as held for sale. I am saying this. Rule will be for 2 marks. Once it's done, say yes. It's okay? Is it okay?
Yes, doctor.
Yes,
Okay.
doctor.
Okay? That is very good. Yeah, every chapter make it a rule, okay? Measurement of non-current assets for sale. How you will measure? Now will be measured at the less value, carrying amount or fair value less cost to sell. Cost to sell is nothing but selling expenses, okay? Whichever is lesser. Is it held for sale non-current assets should be presented separately. You have to present separately in the financial position. Where we have to present? We have to present in current assets. And that has not to be depreciated. We should not depreciate it. Current assets, never, any current assets, no depreciation. Okay? Any current assets, no depreciation. Because we have identified in current assets, it should not be depreciated. Where assets are held under revaluation model, where assets are, if it is classified for sale, then assets should be revalued using the method IES 16 or IES 40 appropriate for reclassification. Again, we will revise what we have done in IAS 16 and what we have done in IAS 40. Okay? It means if it is done, if it is used in when assets are held under revaluation model. Is it? When the assets have been held under revaluation model, we have to use as per 16 or as per 40. Now, we'll complete this and we'll stop. On January 1st, 2000, read this question once. On January 1st, okay, 1/1/2001, they bought machine, is it right? They bought one stamping machine for how much? 20,000. Expect life is how much? Life is 10 years. Is that life is 10 years? No residual value. What happened 30th September 2003? Decide to sell the machine and start auction for. They have decided to sell. Is it right? Decided to sell. And machine are in short supply. So Michelle is confident the machine will be sold fairly. Its market value. What is the market value? Market value is how much? Market value is 13,500. There is expenses, cost to sell. Is it right? Cost to sell. How much? 500. Is it? The machine has been sold at the year end. At what value machine should be stated in machine company financial statements? How many years has been over from 1st January to 30th December? It is how much? It is almost 2 years 9 months. Is it right? 2 years 9 months. For these 2 years 9 months, we have to calculate what? We have to calculate depreciation. Is it? Depreciation. Fine. Straight line method. Okay. Depreciation is on straight line method. How much you will get? Any idea? 20,000 times how much depreciation? Can you tell me? Depreciation how much? 2.9 months. 2.9 months means how much? See the depreciation.
20,000.
20,000. Shortcut. 20,000. 2.9 means how much? 2.75 years. Is it 2.75 years? Is it divided by how many years? 10 years.
10 years.
It comes to how much?
Five, 500. Yeah.
How much?
5,500.
5,500.
55,000. That's it.
Huh?
55,000. Can you check?
No,
Are-
5,000.
No, 5,500.
5,500. Check.
Yes, yes, 5,500.
Is it right? 5,000. Now, carrying amount will be how much? Carrying amount will be how much? All in our understanding, okay? Carrying amount will be how much? 20,000 minus 5,500. Carrying amount as on. Is it right? Carrying amount as on. Date of sale. When we are carrying amount as on 30th 9 2003. 20,000 is the cost. Okay, this is the accumulated depreciation. Is it right? This is the accumulated depreciation. It comes to how much? 14,500. Okay, 14,500. Are you clear about this?
Yes, doctor.
Now, they say fair value less cost to sell. How much? Fair value less cost to sell. Fair value less cost to sell. Is it right? How much is the fair value? Fair value is how much? The market value. Fair value is nothing but the market value. Both are same. Okay. How much? 13,500. How much cost to sell? It will cost to dismantle is how much? 500. Is it right? How much you will get?
13,000.
13,000. Now, what is the rule they say? What is the rule they are saying? They are saying that non-current assets that qualify as held for sale should be measured at what cost? Lower. Carrying amount is how much? Carrying amount is 14,500. Cost to sell is how much? 13,000. Which amount you have to take? Lower of. Which is less?
Fair value.
Fair. How much is there? 13,000. Is it right?
13,000.
Which value you have to take? 13,000. Is it right? Is it right? This is the non-current, current assets. Is it right? Current assets, non-current assets held for sale. Now, what is the impairment? Impairment will be how much? Carrying amount is how much?
14,500.
14,500. Fair value cost to sell is how much?
500.
13,000. Fair value cost to sell is how much? Market, how much you are getting?
13,500.
13,000 only. Cost to sell, 500 you have to pay for selling now. How much we'll get?
The fair value.
Net realizable value is how much?
Value?
Huh?
Okay.
Net realizable value is how much? 13,000.
13,000.
Difference is how much? Difference is how much? 1,500. Is it right? This is called as impairment. Is it okay?
Yes.
Now, at what value should be machine be stated in statement of financial position? Where we are going to show? The rule says that we will show at what rate? We will show at the 13,000. Okay, I will change this one. Is it right? 1 minute. How much? 13,000. Lower of the cost. Okay, lower of the cost. Rule says, is it right? Lower of the cost. I will write here. I will write here. As per the rule, lower of the cost. How much? Lower of the cost is 13,000. Where we are going to show? We will show in the current assets or non-current assets? Is that lower of the cost? Non-current assets helps us. Where we are going to show this? We are going to show this in where? We will show it in the current asset. Is it clear to you? First question, understand the way it is doing. Okay, first question, again I will repeat. Okay, first question, they have said that there is a cost of the asset is 20. What we have learned, the same thing we are doing. 20,000 is the thing. They said that it has been over for how many years? 2 years 9 months. Is it right? 2 years 9 months. We have to calculate depreciation. Is it right? I will write this. I will write like this. This is step 1. Okay, this is step 1. This is step 2. Is that? This is step 2. Is that? This is step 3. Is that? This is step 4. Step 1, what we have done? We have said that yes, what is the information given, that information we have taken. Step 2, what we have done? We have calculated the carrying amount. Okay, depreciation and carrying amount. Step 3, what we have done? We want to know what is the this is step 4. Yeah, step 3, what we have done? We have calculated what is the fair value cost to sell. Fair value is 13,500, cost to sell is 500, non-current asset held for sale is 13,000. Fourth one, what we have done? We have calculated the impairment. Now they are asking what is the value should be shown in the financial position. The rule says that whichever is the lower of the cost. Is that whichever is the lower of the cost? You have two things are there. One cost is 14,000, carrying amount is 14,000 and the sell for sale is 13,000. Whichever is the lower, we will show it in the statement of financial position. Is it okay?
Yes.
Fine.